Hello traders, how are you? This is Wanjiru Gishangi from Forex Exploits Online Academy. How have you been? I hope you've been well. Today's video will be a short one. We're talking about the engulfing candle. Last week, I gave a poll on the Forex Exploits Online page on Facebook, and I asked traders to tell us their favorite candlestick and why. And almost 60%, or actually over 60% of the traders who took part in that poll say that they usually like trading the engulfing candle. Now that got so many inboxes and WhatsApp messages, people asking me to do a video of the engulf because they really did not understand what these 60% of traders were talking about. And this is a short video on how to actually trade an engulfing candle. Now, as usual, all my videos start from a beginner's point. So we'll start with defining what's an engulf candle, where do you look, and of course, where do you trade it. So that's what we'll be discussing today. Let's get to basics. What's an engulfing candle? This is a candlestick that totally covers the previous candlestick. When we talk about covering, it's like it's overshadowing, it's shadowing, okay? And precisely the body. You may find that it will not do 100% of the tails or the wicks. If you're a beginner, go to the other videos, pause this video, go to the other video, the beginner videos, and you understand the body of a candlestick, the 2 wicks or 2 tails, and so forth. So when we're saying about the shadowing, or when it's talking about the covering, this is the body of the candlestick. Note, you can have a bullish engulf, which will be formed by 2 candlesticks, which is a bearish, and the second candlestick is a bullish one. So for a bullish one, the second candlestick should be buying candlestick or bullish. This is very common in a buying trend or cycle. The last time I said, if you hear the name trend, the name cycle, the name order flow, the name direction, the name bias, they're all the same thing. They're just talking about the trend basically. Then bearish candlestick, bearish engulf, sorry, this is when the second candlestick is a selling candlestick, and it's common in a selling trend or cycle. Now you can get the engulf even for counter trades. That's why I've given this note here. The reason I've given this note is because you can find the engulfing candle even on counter trends. But note, the move is most probable. Remember, Forex trading is a probability kind of field. So the move is most probable if taken in line with the overall trend. Therefore, always start checking on market structure from a higher time frame. I have overemphasized on all my videos the importance of having knowledge on market structure for every trader. Doesn't matter if you're a beginner, if you're a professional trader, if you're just in between in there, you need to understand market structure, and more so on the higher time frame, especially for traders who are asking how to tell what to do for the month or for the quarter. We are almost to June. That's like half, the first half of the year is almost coming to an end, and you want to know what to do in the coming month. Just go to your daily time frame and check on market structure. That will really be a good guide. So these are some of the engulfing candlesticks that you may find. So this is what we call a bullish engulf. We have the first candlestick being red or selling candlestick. Then we have a green candlestick totally covering the body of the first one. So when you get this, we say that you have a bullish engulf. Now, when it's a selling engulf or a bearish engulf, we have the first candlestick being a buying or a bullish candlestick, and then the second one is a red candlestick totally covering it to the bottom side. So this is bullish, this is bearish. Now, it's not always this textbook. When you see such perfection, we call it textbook. It's not always looking like this. Could be a variation of, can look like this, where the first candlestick is red and the second one totally covers the body and screen. This is also a bullish engulf, and of course a bearish engulf. But the move is more stronger if, of course, the candlesticks are full-bodied, because this full body candlestick means that there's a lot of volume. Okay, there's a lot of money, there's a lot of business in there. So of course the move will be very, very heavy. But that doesn't mean that you cannot trade this. Okay, of course you can. They all mean the same thing. Now, as usual, if you need to contact me, or if you need to write something or ask for a video, you can find me on Facebook under the Forex Exploits Online Academy. This is where we share everything about Forex. Okay, we share our challenges, we share trading strategies, we also do live sessions. This is where you can inbox your questions, or you can WhatsApp your questions or anything that you want to communicate. Also on the same page, this is where you're going to access my books. I have 6 books in the same field, but different facets of Forex trading. So you can get a copy, you can grab a copy depending with what stage you are or what is missing in your trading. And of course, if you're not on social media, you can find me on LinkedIn under the same name, Forex Exploits Online Academy. Go in there, go through the videos, the post, let us know what you're lacking in your trading, and we can actually try to assist. And of course, if you're watching this video, is because you're on my YouTube channel under the same name, Forex Exploits Online Academy. Be kind to subscribe, share with your friends, and of course, watch the previous videos. And while at it, remember, this is your to-go-to video, the market structure. Make sure that you totally master this video, because it's a good foundation for every trader. So let's get to the session. So how we're going to handle this session is first, remember the note I gave is that it's most probable if taken in line with the overall trend. So when we open our charts, what do we want to see? We want to see the overall trend first. Okay, very, very important. Even before you think of being a buyer or seller, even before you look for the engulfing, the bullish engulfing or bearish engulfing, when you open your charts, you want to get an overall trend first. Why is that important? Because the overall trend is what will determine if whichever engulfing we're going to get will really hold. Okay, so when we open our charts, here we have our charts. If you're day trader, session trader, short-term trader, of course, the 4-hour chart is your to-go-to chart. So I'm going to go to cable. So this is cable on the monthly. Okay, this is where we have your quarter points. I already did a video on how to do your quarter points. So you want to see where the left is, where the market is at. And currently, you can see where the market is at. Going to this other side, you can definitely see what we are expecting. But now that's on another phase. Let's go to the 4-hour chart on the same currency. This is cable. So you go to our 4-hour chart. Now we're looking at the market structure. Remember, market structure is where you tell how the market is doing the impulsive and the reactive moves. And now we had this low that was created where you can see my timestamp. And from this low, the market hasn't hit any low from the 12th of May. We've not had any other low, and we've had a break of market structure to the top side. So basically we can say we're doing a bull run, okay? Or we are on an uptrend. So now we already have known our overall trend on the 4-hour. So what do? You can either choose to do now your end graphs using the 4-hour chart, or you can use your 4-hour chart as the overall trend. And I'll go to the 1-hour chart. This is my favorite. I usually prefer doing the market structure on 4-hour if it's for session trading or day trading. Then I'll go to my 1-hour chart. And if I need now to find, if I need to find my end graph, now I can find them on the 1-hour chart. Again, there's a video on how you can choose your time frames. Of course, depending with your availability and of course your trading personality. For me, I'll be doing the 4-hour for overall trend, the 1-hour for the end gaps, and of course the 15-minute for the trade setups. But you can actually interchange them depending with how you like them. So for me, 1-hour chart, I'll go to the 1-hour chart, same timestamp, just like what I had on my on my 4-hour chart. So I'm going to do 1-hour chart. And of course, I'm going to be marking my engulf. Now, from where my timestamp is, let me move it so that you can actually see what I'm saying. You can see this candlestick. I have a bearish candlestick. That was actually the end of that downward move. Remember the 3 candlestick. I taught you that when I was talking about the trend line, the break and retest. I told you how to draw your 3 candles to the bottom or 3 candlestick to the top. So you see this. And then there's this bullish candlestick that totally covered that body, meaning this is my bullish engulf. So what will I do? I'll mark it. And how am I going to mark it? By just doing a box or a rectangle. And this is what I'm using. When you open, for beginners, when you open your trading platform, this rectangle is usually hidden on the other back office or something of the platform. So how you set it up here, you just right click anywhere on that toolbar, click on customize, scroll down until you get the name rectangle. When you do, click insert, then close. When you do that, your rectangle will appear up here, and therefore it will be very easy for you to use. How do you use it? By just you click, you right click, left hold and drag. Okay, very easy. And of course you can change your size. You can also change your colors. Okay, you can change your colors and that. So that's how you get your boxes. So I've already done the boxes. So here we have this bullish engulf. So I'll draw it. Then I have this. So on the 1 hour chart, I just want to mark my engulfs. Then I have another bullish. Remember, the overall trend is buying. Therefore, I'm just looking for the bullish engulfings. So now, if you note on all these engulfings that I have marked, is that the market is creating the bullish engulf, then coming back to it. This is what we call it's retesting. It's coming back to it. But that is what we'll talk shortly. But you see, we have this bullish engulf. What happens? The market comes back to retest it. Then we have this bullish engulf. What happens? The market comes back to retest. And we have this bullish engulf. What happens? The market came back. And from the beginning of the trend, what happened? The market came back. Now, the importance of just following the overall trend. Let me give you an example. Look at this here. This is also an engulfing candlestick, right? But this is a bearish. Why are we calling it bearish? Because of course it's the second candlestick is red. So if I was to mark this here, let's give it a different color. If I was to mark this, what would I expect? I would expect the market to hit and come back or retest back. But you can see what happened. It was violated. Now, sometimes it may not have this violation, but if you want to be totally safe, and I'm talking about those people who are like me, who are risk averse, you really want to make the trend your friend. So let's just ignore this. But for people who like counter trading, of course, this is also something that you can pay attention to. This is also another bearish engulfing, but again, it was violated. So I usually say if you're on a buying cycle, just concentrate on the bullish. Now on my 1 hour chart, I've identified my bullish engulfing. So what next? Now I go to my 15 minutes time frame or my trading setup time frame and check at the point where the market is going to retest. That will be the entry. Now beginners in the house, note this and write it on your notebooks that you do not chase a trade. You do not chase the first impulse move. What do? You wait for the market to retest. So the rule is you look for an impulse move, which is the engulf. Then you wait for the retest. This is where you literally sit on your hands, wait for the retest back, not just a small retracement. No, retesting back into the same impulsive move, onto the same source where the impulsive move came from. Wait, patiently wait. And then when the market is back into that source, now you can get in. Of course, there are other things to pay attention to within the retest, especially if they're going to be liquidity or stop hunting. But basically, just keep it simple. Don't join the first move. Wait for the second. Now let's go to the trade setup. So I'm using the same timestamps just to keep it consistent. So we'll go to where it started. Just started here. The blue ones now are my 1 hour engulf. The blue one is showing the 1 hour engulf. Then now on the trading setup, what do you want to see? You want to refine. You want to refine that point so that you can have what we call optimal entry. Beginners, what is refining? This is getting a block inside a block, or getting a lower or risk, minimizing your risk, okay, by getting a block within a block. So now here we have the 1 hour, our 1 hour engulf shown by the blue box. And then on the 15, we'll go inside that blue box and see if we can also have maybe another block in there. And you can see the 3 candlesticks to the bottom side. They are broken by this green candlestick. So with that red candlestick, we can also create another block, which is the white one. Now, this is our point of entry. Now, if you're late, this is what we call optimal entry, where your risk will be very small. Like you get in here, inside that box, and your stop loss can be, so let's say you did the 50%. So your stop loss would be 6 pips. And then you can actually get that 171 or 183 pips. But note, this is just minimizing the risk. So you can get in here, or if you're late, you can actually use the 1 hour block. The 1 hour block, this one here. You can actually get in your trade at this point here. So you can have a limit order, a buy stop, or whatever here at the top. And then the market will just activate when it gets there. But the good thing with the refining is that your stop loss gets lower, okay? There's something I want to mention about the same. Look at this example here. So we have the blue showing the 1 hour engulf. Then we go to the 15. What do we want to see inside that 1 hour engulf? We want to find another block in there. And here we have an engulf. I hope you can see this on the 15. So within the same, inside the same 1 hour block, we have another engulf. So we're going to draw a block. Remember, for an engulf, you're interested with the candlestick that has been engulfed. So you don't draw your engulf to this point. No, the candlestick that has been engulfed is the one that gives you your block. Then you draw it and extend it. Now you don't get in here. You don't join the trade anywhere in here. No. What do you want? You want the market to actually come back into your refined block or into your trading time frame block, and you can see it was tapped. So here, if you did the 50%, you would have missed the trade. I hope you've watched the other videos. I showed you how to do your 50%. So if you had a limit here on the 50%, you would have missed it. And the only person who would have gotten it is the person who had a limit or had time to check it, either at the optimal or on the late entry with the 1 hour block. Now, all this here, and all these attempts, you can see this trying to come back, but it did not get into our move. So this is what we call liquidity. So don't get yourself trapped. On our last video, I discussed how not to make yourself liquidity. Okay, by just sitting on your hands, being very patient. Don't join with this. These are just trapping you so that they can get your money as they come back to the actual move. So just sit on your hands, wait for the market to actually come back into your block, and now you can get it. The good thing with using the refined block is, of course, check your stop loss. Let's say you get in here. So your stop loss should be below there. So you have 10, and what's your, that is 109. So you're risking 10 for 109. This is 1:10, which is pretty fair. Then if it's on a range, you still can catch a few pips. Though for me, as an institutional trader, or as a block trader, I usually do not trade ranges at all. So if you really pressed, you can take these, which is not advisable, though it's following the same rules. But for me, I would prefer if you can just trade in line with the trend without touching the ranges. Again, here we have the 1 hour block. In there, we have another engulf. Hope you can see this engulf. So we have the white box. So you can get in either with the 50. I don't know if it hit the 50. Let's see. I did not get the 50, but of course you'd have gotten the optimal there. So it was triggered, then you get some money in there, and this is where the market is at. So that's how you do from the 1 hour. You start from the 4 hour, get your trend. 1 hour, get your bullish engulfs if you're on the buying trend. Now mark you and wait for the market to come back. When it's coming back, you don't trade on the 1 hour. It's less risky, or you risk less if you can go to a lower time frame. After you've identified that the market is coming back, now you wait for the trade setup on your 15 minutes, or you can do your 5 minutes. It's pretty easy. Now let's check an example on the selling cycle. So of course we go to the 4 hour chart. This is USD CAD. On the 4 hour chart, we hit this high, we had a stop hunt, and from that point we've not hit that high or any high higher than that. So of course that would mean we'll be looking for a break of market structure, which already happened here, and so we're pushing down. So with this part here, we can say we're doing a short run, or we're doing a bearish run. So that means we'll be looking for the selling or the bearish engulf. So that's on our 4 hour chart. So we go to the 1 hour chart, and now we start identifying our bearish engulf. Remember, the bearish engulf will look like this. So to be a green candlestick, then a red candlestick down. Okay, can be this or can be this. These are what we're looking for. So let's go to the 1 hour chart. Same timestamp. So we have this here. We have the green candlestick being totally engulfed. Remember, we're interested with the body, even though this one is covering everything. So we have this. We drew our bearish block, or bearish engulf block. Then we have this green candlestick, red candlestick. We drew that. Okay, we've identified all of them on the 1 hour chart. What do we do now? We can actually trade them on the 1 hour by waiting, but we have lost so much opportunities or so many pips if we trade on a higher time frame. So go to the lower time frame, which is the 15 for my choice. The 1 hour block is the gray one in this chart. Okay, you can see it's very huge. So now the downside of trading with 1 hour is that your stop loss will be really big. Eh? It will be really huge. So what you do, you can define inside that 1 hour block. Now look for another engulf, okay, inside there, and you can find that we have this here. So we're going to draw the 15. What do? We wait for the market to actually come back. We wait for the market to actually come back in this 15-minute block, and there we have it. We have this. So if you're taking the 50%, here they have intertwined, but I hope you can clearly see that we have this red candlestick hitting our 50% and give us that sell. Okay, for the second one, we have this 1 hour engulf. So what do? Inside that 1 hour engulf, we want to find another. Now, finding another block inside that block is what we call refinement. Okay, I hope that's clear. And if it's not clear, go to the YouTube channel, and on the blog series, we have this part 2. Where we talk about refinement. So when you talk about going to a lower time frame, finding a block inside a block is explained here on how to refine. So you can actually watch the blog series. It has a part 1. I think, yeah, there's the part 1, this is part 2, and we have part 3. That will make it easier for you. But basically what I'm saying is inside the 1 hour block, go find another engulf inside there. And then you can find out. Something I want to mention is look at this part here. Where now, when the market comes back into your block, it actually does a stop hunt. So this is where your stop loss will be hit. Genuinely, it will be hit. because either there was an economic event or there was some manipulation. So have some room for some losses. As long as you're a trader, always remember there is a chance to lose your money. So when this stop hunt happens, your stop loss will be hit. But don't give up. If that candlestick just stop hunts you stop loss, but the body usually closes inside the block, now make your money back. I hope I'm clear. If it's just a stop hunt, meaning it's just a tail, but the body closes inside, this is where you have to actually be very, very patient. Do not revenge trade. Wait for the candlestick to close. If it closes inside your refined block, then you know that was a stop hunt. So wait for the other candlestick to give you discount entries. Discount entries means if your shift was really huge, you can get either 50 or 30%. So you could have joined a sell from this point and made your money back, make the money that was stop hunting. So don't just give up, wait and see if it was a stop hunt, get your money back. I hope that's clear. Then we have the 1 hour block here. Wait, go to your 15 time frame, look for another engulfing block inside there. And you wait, this was actually retested almost to 100%. Then you can get into your trade. Now let's talk about this move first. I can't remember which video I did about liquidity, but there is a video on liquidity, the different types of liquidity. Don't get trapped. Don't get yourself caught up with this move that doesn't get back to your refined block. Because this one will have you sitting and doubting your trade. This one, if you get caught here, you can actually know, yeah, we're selling, but you'll be in red for so long before the actual move actually happens. So be very patient, sit on your hands. If you can avoid, don't get yourself trapped with this liquidity. Be very, very patient. Wait for the market to come back into your refined block, then get in. Now, it's not 100% that this getting back into your refined block must happen or within the same day with the same session. No, it can actually happen the following day, or it can happen in the next session. All you have to do is be very, very patient and don't get caught. And of course, for late entries, what usually happens is after the market has retested your block, it can also try to give what we call a scare. Okay, the trade is good, but everybody has joined the good trade, so they'll try giving you a pattern, a false pattern, as if this was not true and this would be a buy. If you're a pattern trader, you can basically see how cute this is with all these engulf buy, and everybody's trying to buy, but of course it's a trap. They want to get off all these volumes that have joined the good trade, but once everybody is changing direction to the buy, what happens? It only takes one shift candle away and it's actually a sell. So have confidence. If you're going to trade the engulfing candle, have the confidence, set your trade, set your stop loss, forget about it. Okay. By the way, trading the engulfing candle is usually very, very good to work on your discipline. It will help you really work on your discipline. When you talk about trading discipline, this is where you can actually set your trade, set your stop loss, set your take profit, and forget about it. Whatever happens, happens. If your stop loss is hit, well and good. Come check, was it a stop hunt? If it was, join in the trade with the second candlestick. If it was not a stop hunt, and how do you know it's not a stop hunt? When the actual body of a candlestick actually closes above your 1 hour chart, or 1 hour chart block, to be precise. So if it's a candlestick, a whole candlestick comes here and it's big and there are others, now that's not stop hunting. Stop hunting should either be a tail or two in and out sort of candlestick, where you have one green candlestick and the next one is usually red bearish and it's moving down. Okay, only that kind. But if it's two candlesticks that are green, a whole green candlestick, that's not stop hunting. So make peace with the money you've lost and wake up the next day and try to make it back, but do not revenge trade. Then here we have the 1 hour block. We have liquidity. being taken out. And this kind of moves where liquidity has been taken out is usually, you know, longer. It flows longer and it can actually flow to the next day, like what has happened here. But again, check the stop hand, see what happened. There's a tail throwing you and kicking your stop loss, you know, hitting your stop loss and making you lose money. But again, look at the body of the candlestick. It hit your stop loss, yes, but the body closed inside the refined block. So what do? You make peace with your losses, join in the trade, and actually would be enjoying the trade to this day. So guys, that's how to trade the engulfing candle. Don't forget the steps. Go to a higher time frame of your choice, identify the overall trend. Then go to another higher time frame, maybe a lower time frame from the one that you've used for trend. Now identify your engulf candle. Then go to a much lower time frame, which can be 15, 35, or 1 minute, and now identify or refine the block, find a block inside the block that you found on the higher time frame. Then wait patiently for the market to go back. Wait patiently for the market to go back to your refined block, not the higher time frame block. No, the market that will go back to your higher time frame block, that will be the liquidity being created so that it will be hit later. Now wait for the market to actually go back to your refined block. And if the market gets to your refined block, set in your trade, set in your stop loss, set in your take profit, and let the market move. If there's stop hand where there's a candlestick or a tail or a wick that gets out of your liquidity, out of your refined block, don't revenge trade. Wait for the candlestick to actually close. If it closes inside your refined block, now join in the trade. Either give the market time to give you a discount entry. If that shift or liquidity candle was really big, it will give you a 50 or 30%. If it's not really big, just join in the second one, make your money back, and you know, get in, get paid, get out. So guys, that's all. Thank you so much. And until the next video, remember you can find me on all the socials, just like I had explained earlier. And my favorite is the Forex Experts online page on Facebook. I'm looking forward to seeing you on the page, getting to know, to hear your feedback. Tell us which of my books influences your trading, what is missing, and of course, any other video that you wish I could make for you guys. Otherwise, thank you so much, and I wish you the very, very best. Until the next time, do have a great one. Bye-bye.